All right, so today we want to look at top-down analysis. Now, the way we're going to look at this, let me just go to one of these plain markets here. So this is our chart on the 15 minutes time frame, as you can see here. This is how it looks. So for advanced top-down analysis, the first thing is you want to get a general bias. Now, a bias is just your idea of where the market is going. So we go on the 1 day time frame. Then what we want to do is you can get this thing, the path, and then keep track of what has been happening, the most recent price action. So you can see here, starting from here, there was this massive push, we dropped, then there was that massive push, then the market was here, it failed to go any higher than this, then it dropped lower, there was that push up, it got rejected lower, then there was this push up, then it dropped, then there was that push up, then it dropped some more. Now, what you really want to focus on when you're doing all this is asking yourself the question, is this market in an uptrend or a downtrend? How do you know that? So if by looking at what was happening here, you can see that the market pushed from this point, going up like that. Then we had this minor retracement, then that strong push upwards. Now we know that for an uptrend, the market has to keep making higher highs like this. It's downward push, there's that upward move, then you have that upward push, then this downward move, then just like that. So this is how you can tell that the market is in an uptrend. But then the opposite of this is also true. It means you're in a downtrend. If you're making lower lows and lower highs like this. You can watch my market structure video. It explains this in more detail. So you are seeing this. So this current market here. By the way, this analysis is what we are going to use for this week. So I can remove this. So according to what I've just done, you can easily tell that this market is in a downtrend because look at where this downward move, a push up, another downward move, a push up, then when that downward move. So you can see that the market was making lower lows, these lower lows, and lower highs, these ones here on top. And you can see that it failed to go past that level. So I can remove this. So this on the day time frame tells me that overall for Euro USD, the market is bearish, meaning it's going downwards. But then you have to take note. You notice that the way this market moved from this point here all the way to that level there, it didn't make any correction. By correction, what I just mean is the market did not make any of these retracement. Remember, a market moves like this. An impulsive move followed by a retracement, then another impulsive move followed by a retracement, then another impulsive move like that. So it's supposed to be on the other side. So that's how a market moves. So what I'm saying is most likely this market is going to retrace back to this level. So what we can expect is this market will try to retrace a little bit all the way back to this level before it continues going down. but it can also break this level and start making new highs. How do I know that it's going to continue going down? Well, I don't. The only reason why I'm saying it's most likely to go down is because chances are this market is more likely to go downwards than it is to go upwards. So this is what you're supposed to do on your H1, D1, I mean. So let me just remove that. So we know that overall the market is in a downtrend, but it will probably this week create some form of retracement, meaning on lower time frame is going to show that it has started moving upwards before it can actually continue going downwards. So that's what I do on the D1. Then I'll move to the H4. Now here I'm just observing to sort of um, quantify what we've just done on the D1. What I mean by that is you can see things more clearly here. You saw that push, we had this minor retracement. The market failed to go past that level. Hence, we saw this downtrend being formed all the way to where we are here. Now let me remove this. If I was to go back on this D1, you will notice that if I was to draw a line here, somewhere right around this level, then if we were to move to the H4, you notice that this move here did not make a correction. This was like a strong move down, which did not make any correction. By correction, I just mean it did not retrace back. What I mean, let me just use some visual here. What I mean is this: when the market is going in any trend, now this one, since it's a downtrend, I want to show exactly what's going on here, right? It makes those minor corrections or retracements. So you have these minor retracements here. You have that one. You also have this one. That one there. So you can see this was a strong move with almost no retracements at all. So now, let me just remove that. Straight to the point. So now what I'm saying is this market is likely going to push, just put that there. You see from this level where it is, it's going to try and make this retracement move all the way to almost that level before it continues going downwards. Can already see here there's strong resistance. So let me remove this. Now what I want to do is I've solidified my analysis so I know exactly what my key levels are. There's this level here. The market is likely to try and push, getting back all the way to this level here. Now what I want to do is I'll go to the H1 because I don't like drawing a lot of key levels on my charts. I like having clean charts like that. So we see we had some strong level here, somewhere right around that level. Quite strong. We had also another strong level right around there. Then we have some form of resistance here where the market currently is. Now here, basically what I'm doing, I'm just identifying the most recent levels where the market has just made either support or resistance levels. So after you have that, the next thing you want to do is, and this by the way is on the H1. So the next time frame I want to look at is the M15. This is where I take my trades from. So then what I'm going to do here is very simple. Since overall we know that the market is in a downtrend. So what I would love to do now is kind of see at what exact level is the market likely to turn. So you can see, right? It seems like the market has been respecting this level. We are at this point where the market turned from. We also have another point right here where the market turned from. So now we're going to look for a third point somewhere right around that level. Now, what would qualify this trade for me to end? It's very simple. I'll wait for the market to break. Remember, I just drew these key levels here. This one, and that one. So we're just going to wait for the market to touch that trend line, break this zone, come back for a retest, and then push to the downside. So this is what I'll be waiting for. So then I give all these things a score. So what I mean by that is I'll just put 70% here, 70% there. Then the next thing I want to do is I'll put like 30% on top. Because remember, this is just probability. It doesn't mean what you've analyzed is always what's going to happen. Sometimes the market will do something that you didn't even analyze. So analysis just helps you to be confident with where you feel the market is going to go. And if it goes there, like your confidence is going to be up. But then sometimes it goes in the opposite direction. So you have to just be flexible. So that's why I put these numbers here. So I know that chances are this market is more likely to go down than it is to go up. And if it goes up by any chance, since the score here is only 30%, and the push to the downside is 70%, I know that the market won't be able to sustain the upward push for a long time. So I would wait for it to break this level, then maybe come back for a retracement, break this other level, come back for a pullback, then I'll trade all the way till that level. Hope this makes sense. But then I'll know that after the market reaches this level here, it's probably going to start coming down. Why? Because on the higher time frames, we've seen that overall the market is in a downtrend. This upward push I'm talking about, if you remember what I was saying, let's go back to the D1 and then let me hide those things. That upwards trend is probably going to be caused by, remember when we were analyzing, we said we have like a key level here. We said this market, let me hide that. We said this market moved very quickly. Actually, let me use this. From this level all the way to that level. This point here, you can see there was this strong momentum candle moving to the downside. Then we had this smaller candle, then we had another strong momentum candle. So this means this market has moved very fast to the downside. Hence, this move can't be sustained. So since we know that this move can't be sustained, what we're going to do is we're going to wait for the market to kind of come back to this area here, this zone. Wait for it to come back to this zone, this one here. Once the market comes back to this zone, then we can now continue the down move. So let me remove that. But this smaller move from here where the market is pushing all the way to this level before it continues downwards, on the smaller time frames, that's going to be a very big move. Let me remove this and that. So if the market doesn't do any of the things we've said, we just don't trade, we leave it at that. But it's definitely going to do one of these two things. Either going to break the trend line, which is most unlikely because it has a 30% chance of happening. There's a 30% chance of happening. The most likely move is this one going to the downside. But remember, on the D1, there is that retracement which has to happen. So that retracement can be this move all the way to there before it continues to the downside. So we would have to wait. Once the market opens, we see what's going to actually happen. Hope this makes sense. So I can actually move this there. The next thing you want to do is, let's look at what about JPY. Let me just remove that. So we're going to go through GPP, JPY. So the format is still the same. Remember what I always say, when you are so confused, you don't know what's going on, get this path. It will help you stick to the most recent price action. So you can see that we had this strong move up, then there was this downward move, then there was that push up, we had this minor move, we had that push up, we had this, we had that minor move, we had that, then a strong impulsive move to the upside, then we had this retracement, then we had this, then there was that drop. Now, here, what you want to focus on, this was helping you to kind of understand what trend was happening at the time. So you can see that here we had like an uptrend because the market was making higher highs and higher lows like that. It kept doing that until it reached this level here. So you can see from the time the market reached this level, it made a double top. Hence, it dropped. Once it formed this double top, obviously you know now that the sellers are stepping in. This is most likely going to change into a downtrend. Why? Because if the buyers still have enough potential to keep pushing the market up, they're supposed to like be breaking the previous highs in order for this to continue to be an uptrend. So that was showing some form of weakness, but it doesn't tell us anything. Just that the buyers are losing momentum. Then from there, we see now what's currently happening here. Remember, I said this move overall is an upwards move. But then we want to focus on the most recent price action. You can see that the market made an impulsive move, then it dropped, then it failed to break that level. Instead, it turned from here, then we see this strong bearish move to the downside. So now, what we're going to do here is simple. For this week, what we're going to do is simple. Our bias is going to be that if the market breaks below this level, it means that we are in a downtrend overall. But if the market goes ahead and breaks above that level, it means that it's sustaining this uptrend that it has made. Hope that makes sense. So if this is what I'm going to do, then what I usually do is I change the colors for the candles like that to black. So then what we're going to do, we'll just wait for the market to do either one of those things I've said. Either it breaks that, comes back for a retest, continues to the downside. We expect it to drop to that level. Or the other thing it can do is, from here, you can see that there's somehow a rejection. It might push up, come back for a retest, then move upwards. Then it moves upwards, like that. So it's either it does one of those two things. So now we'll move on to the H4. We see exactly what was going on. So you can see there's this rejection here. The market is probably pushing till that level there. So our main bias here is going to change from a 60 to 70 is going to be, oh sorry, from a 70 to 30 it's going to be 60 to 40. Why? Because the market has failed to break past this level, meaning there's a shift in market structure, meaning this is more likely to be a downtrend than it is to be an uptrend. But chances are, since it's been coming with a strong uptrend, it might just break that and continue. So in the H4, you can see it's forming some sort of range. So this is the range it has formed. You can see on the H1 now more clearly. So what I'll do now, I'll just mark the most recent price action. Let me change this back to magenta here. We have that. Then I can move. Let me see, there's something I'm seeing. Okay, this was another key level. This is another key level. So if the market breaks this level, we're expecting it at least to push all the way to that level there. We're expecting it to push all the way to that level. But if it fails to break this, it's probably going to drop all the way to this level. We're not going to enter the market until it breaks below that line, comes back for a retest, and it continues. So analysis is as easy as that. So now I can move this more into perspective. You see that these black lines are for the daytime frame. And then these ones here are for the H1. So we're expecting that this market is either going to break, once it breaks that level, we'll wait for a retest, then we'll trade all the way to that point there. If it fails to do that, we will just wait for this push to break that, come back for a retest, and then trade to the downside like that. So those are the two options that exist for this. Is there any questions on this so far? So whatever I'm doing right now is just simply coming up with a bias. So if I go to the D1, see that overall we had an uptrend which failed to make a higher high. So I'm going to say we have a 60% chance of going up and 40% chance of going down. So the reason I put these percentages is just to help me remember when I come back to the markets, what was happening. So I usually use this call out, just put it here. So failed to create a higher high on D1. Just put one like that. So now what we're going to just be doing here, simply waiting to see what happens here. So that's another example. We are done. We can look at the last example. Let's see. This one. See. USD cut. Okay, can remove that analysis I did. Like what I was saying, this market is most likely not going to be able to sustain this upwards move. What I mean is, you can see that starting from here, the market had been pushing in a normal uptrend, just creating higher highs and higher lows. Then all of a sudden, it made this long, impulsive move. Now you know for a fact that the market won't be able to sustain this. What I just mean is, it won't be able to continue this upwards move without making some kind of retracement before it continues going to the upside. And you know for a fact that this retracement has to be on a key level. You can see this is a key level. What I've just drawn. How do I know? So if I was to remove this, change this to a line chart, you notice that the market had been bouncing off this level. We had that, we had this, we had this. So it's more likely going to come back to this point here before it continues going up. But overall, USD CAD is in an uptrend. So that's what I get from the D1. The next thing you want to do is, let me go back to my candles. Here, the reason why I'm not putting any lines or drawings is because I don't want to fill up my charts. Now we want to see more clearly what's been going on. So you can see there's some strong resistance level here, which caused that impulsive push up. You can see on several occasions the market had been failing to go above that line. All these things, attempts failed until we had that impulsive move to the upside. H1, I just want to look at key levels. So you can see we had some level here. By the way, I like focusing on the most recent levels because they are closer to price action. This, and then we're just going to put a level there. So now my thought process is this. Since I've said the market is likely to retrace on the D1, we saw that the upwards move, this one, it can't be sustained. It has to like retrace back, probably somewhere around that level, and continue going up. Since overall the trend is to the upside. So what we want to do on the M15 is wait and see what the market does. We're going to wait for it to retrace all the way to this zone. We're going to wait for this market to retrace all the way to our zone. Once it's here, we'll just wait for confirmation before we trade back upwards like that. It's as simple as that. If the market doesn't do what I've said, it can decide to just go straight, break this level, and then come back for a retracement, and then continue going to the upside. That's also another possibility. Though the most likely is the market has to come down to that level. All right, then hopes this helps you. I'll see you in the next video then. Let's see. I'll upload the recording on YouTube. So the last thing you want to do is just wait until the market tells you where it's